For WTI, the US President Donald Trump is considering suspending the Jones Act again as gasoline prices remain above $4 per gallon, increasing political pressure ahead of the midterm elections. A suspension would allow cheaper foreign-flagged vessels to transport crude oil and refined products between the US ports. However, the previous waiver had limited impact on gasoline prices because shipping costs only represent a small part of the final fuel price. As a result, Trump is also increasing pressure on major oil companies such as ExxonMobil and Chevron over concerns about excessive profits during periods of high energy prices. The Jones Act requires cargo transport to be between the U.S. ports to U.S.-built, U.S.-owned, and primarily U.S. crude vessels. It was designed to protect the domestic shipping capacity, maritime jobs, and also national security. However, the critics argue that it raises transportation costs for consumers. Therefore, while another temporary waiver may ease the fuel transportation bottlenecks, it is unlikely to significantly reduce the gasoline prices without broader improvements in the oil supply. For the USD, the key focus for the US dollar next week is the July CPI. The market expects core CPI to rise 0.2% month-on-month and headline CPI by 0.1%. However, recent PMI and ISM data suggest inflation may be stronger than expected, particularly services, meaning the core CPI could reach 0.3% or higher. The main drivers are higher energy prices following the renewed US-Iran war, the US-Iran tensions, and also potentially pushing the headline CPI above expectations. And there's also housing inflation, and then there's also structural services inflation, particularly healthcare costs and demographic pressures, which remains persistent. If healthcare inflation rebounds in July, core CPI could again surprise to the upside. Overall, a stronger than expected data could support the US dollar by reinforcing expectations that the Federal Reserve will keep the interest rates higher for longer. And for precious metals, the sentiment towards gold remains strongly bullish. In Kito's latest survey, 84% of Wall Street analysts expect gold prices to rise, while nearly 69% of retail investors remain bullish. Gold is currently trading above the important $4,000 support level, which it remains a broader range below $4,500 level. The main risk this week is the inflation data. A stronger CPI reading could increase expectations of tighter Federal Reserve policy, supporting dollar and potentially limiting the gold's upside. And therefore, while the market sentiment now remains bullish, gold may struggle to break significantly higher unless the inflation data weakens or there are expectations for further Fed tightening decline.